It's important to diversify your investments in a lot of different asset allocation categories. One of them is foreign stocks. You can both diversify for safety and boost your returns by adding international investments to your portfolio. And there's a lot of different categories for international stocks, and they don't all move in sync with one another. Some of your money should be put into the emerging markets category, and you can gain even greater diversification and returns from this. Emerging markets are like lighter fluid. They're up 40% one year, they're down 50% the next year, but over the long term, they actually make more money. One of the reasons why emerging markets make more money is because when America and Great Britain invented the Industrial Revolution, we had to invent it from scratch, and it was a very, very slow process. For emerging markets, they have not gone through the Industrial Revolution, and all it takes for them to go through the Industrial Revolution is they just need to send some people to American universities, and they can come back and they can implement the Industrial Revolution in a matter of a very short number of years. Emerging markets are inherently more volatile than the markets of developed countries. So if you have a very small investment in emerging markets, it's not too wild a ride, and you need to balance that with investments in more developed countries. If you have a very small account, just investing in developed countries is good enough. But if you have a large enough account, you might put 2/3 in developed countries and 1/3 into the emerging markets. For even larger accounts, we use a more complex asset allocation for further diversification. And we take advantage of the fact that economic growth often flourishes in countries with the greatest economic freedom. We use the Heritage Foundation's measurements of economic freedom to select those places in the world that combine the greatest economic freedom with the largest investable markets. Since 1994, the Heritage Foundation Index of Economics Freedom has used a systematic empirical measurement of economic freedom in countries worldwide. Their conclusions clearly show that economic freedom and higher rates of long-term economic growth go together. Investors can use that study to select countries for their foreign stock allocation. According to the Heritage Foundation, economic freedom is defined as the absence of government coercion or constraint on the production, distribution, or consumption of goods and services beyond the extent necessary for citizens to protect and maintain liberty. In other words, people are free to work, produce, consume, and invest in the ways they feel are the most productive. The foundation bases a country's economic freedom score on 50 measurements. They fall under these 10 categories: trade policy, physical burden of government, government intervention in the economy, monetary policy, capital flows, and foreign investment, banking and finance, wages and prices, property rights, regulation, and informal market activity. Although all 10 boost economic growth, some, such as investment freedom, are more significant to outside investors. Others, such as monetary freedom, are more critical to that country's own citizens. Free countries impose few or no restrictions on foreign investments. Thus, they represent the greatest opportunity for investment. More than a third of the world imposes serious restrictions on the ability to run businesses, purchase real estate, or transfer capital. These countries are best avoided. A number of countries rank high in economic freedom and also have exchange-traded funds which you can invest in and make investing easy. The countries with the most economic freedom changes regularly, so you need to review your foreign portfolio annually. Diversifying your foreign investments is just one critical element of an optimal asset allocation. Building balanced portfolios that are more likely to meet your financial goals doesn't happen by accident or by working with someone whose interests are in conflict with yours. So visit our website for more information or to find a fee-only advisor in your area.